Let's talk SoFi Technologies, up, what, an incredible 241% in just a year. The big question is this a rocket ship you should be jumping on right now? Or maybe more like a firework that's, about to fizzle out. You're about to get the inside track. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we are doing a deep dive into SoFi Technologies, ticker SoFi. And this is all based on our research from Market Open this morning, August 27th, 2025. Now, before we really get into SoFi itself, let's just quickly set the stage, the broader market picture. This morning, it feels a bit like a case of the Mondays on a Wednesday, doesn't it? Pre-market futures are looking slightly lower, especially for the tech-heavy NASDAQ. And adding to that kind of cautious mood, Moody's just put out a report saying nearly a third of the U.S. economy is either in recession or, well, at high risk. Plus, we'll be keeping an ear out for comments from the Fed's Williams later today.
Right. And this broader kind of fragile market environment, it immediately raises a bit of a yellow flag for any stock, really.
Yeah.
Especially one that's been flying as high as SoFi has.
Yeah.
It just sets a cautious tone. It reminds us that even really dynamic companies aren't completely immune to these macro headwinds.
Yeah.
Which is a crucial context for how we look at SoFi right now.
Yeah, exactly. That broader yellow flag environment definitely makes us scrutinize these high flyers like SoFi even more closely. So let's unpack SoFi's fundamental story. Let's see if this rocket ship, so to speak, is built to handle potential turbulence. I mean, the company has shown just incredible momentum. It closed at an all-time high yesterday after jumping 4.5%. And yes, that surge over the past year, 241%, it's huge. Plus, they just announced that new partnership with Lightspark, for blockchain-based international money transfers. That sounds potentially significant.
It does sound significant, but here's the stark counterpoint our valuation models are showing. So while the stock's trading around, $25.62, our models estimate its fair value is only about $12 to $14 a share.
Wow, that's quite a gap.
It is. And it isn't just saying the price is high. It really suggests investors are building in absolutely zero margin for error. No room for any future disappointment. The market is, truly pricing in perfection, as they say, which means the stock's future really hinges on flawless execution and, frankly, continued bull market. That's a very high bar for any company.
And Wall Street seems a bit divided too, right?
Very much so. The consensus is basically a hold. You've got 11 out of 22 analysts just sitting on the fence there. And we've actually seen the strong buy ratings dwindle over the last 3 months, while strong sell ratings have started to creep up. It's that classic battle. Great business momentum clashing with a sky-high valuation.
Okay, so if the fundamentals are flashing caution signs, what about the sentiment? What's the crowd doing? Because it sounds like a tale of two very different bets here. On one hand, you look at the options market, it shows pretty strong optimism. That put-to-call ratio is low, 0.39. So for every option betting the stock falls, there are almost 3 betting it goes up. And traders are piling into those bullish call options, especially around the $27 strike price.
Exactly. But then you flip the coin, and you see really significant bearish sentiment indicated by that hefty short interest, 8.91% of the float.
Nearly 1 in 10 shares.
Precisely. Nearly 1 in 10 shares are being borrowed and sold by people betting the price will drop.
It really does sound like a classic market wrestling match is going on, a standoff.
And that kind of split, that sentiment divergence, it often leads to elevated volatility. You expect bigger swings. While the options market might suggest some short-term bullishness, that high short interest means any sign of weakness could get amplified if shorts rush to cover.
The short squeeze potential.
Or, conversely, if the bears turn out to be right, the fall could be sharper because of that existing negative bet.
Okay, so fundamental stretched, sentiment split. What about the technicals? This seems like a critical piece of the puzzle right now. And for the short term, at least, the picture looks incredibly clear, doesn't it? Every single trend following gauge we look at, short term to long term, they're all pointing firmly upward. The stock is sitting comfortably above all its key moving averages. That signals a pretty strong established direction. Plus, the money flow indicators, which kind of track the underlying buying and selling pressure, they show consistent and, frankly, powerful accumulation. It suggests the big players, the institutions, are stepping in and backing this move.
Right, which raises an important question. Is this rally maybe losing steam despite those valuation concerns? Well, our momentum gauges, which measure the speed and strength of price changes, they actually show the upward energy is reaccelerating. It's not fading yet.
Okay, so momentum is still building.
It appears so. However, and this is important, you absolutely should expect elevated volatility. Even though SoFi has broken out to new highs, sharp moves, in either direction are still very much on the table. That's not unusual for a stock with this much attention and debate around it.
Right. Makes sense. So, boiling it all down, what does this mean for your playbook today? We have this core conflict, right? Where the spreadsheet, the fundamentals might be saying sell, but the chart, the technicals seem to be screaming buy.
It's that timeless dilemma in investing, isn't it? The head versus the gut, or maybe the balance sheet versus the candlestick chart.
It really is. And well, our verdict for today is a bullish outlook.
Bullish, despite the macro worries and the valuation. Yes. Despite the caution flags on the macro front and that fundamentally stretched valuation, the technical picture is just overwhelmingly strong right now. For a short-term trade, the immediate price action, the market sentiment, what traders just call the tape, often dictates the direction more powerfully than long-term value, especially for a high beta, high momentum stock like SoFi. And that bullish option sentiment adds a bit of a tailwind too, even with all those short sellers hanging around. The tape wins for now.
Okay, the tape wins. So, for your game plan today, what are the key levels to watch?
Keep a close eye on the $25 level. That's your critical support. It's a key price level where buyers have stepped in before. As long as SoFi holds above $25, the bulls really remain in control.
And on the upside?
Your primary upside target is the $27 level. That's how those call options are clustered. It represents a significant potential resistance point. A decisive break above $27 could really trigger more buying, maybe even force some of those shorts to cover, adding fuel to the fire.
Got it. $25 support, $27 target. So there you have it. SoFi Technologies. Definitely a high volatility stock right now where the chart and the fundamentals are telling pretty different stories. It suggests the potential for sharp, fast moves is definitely there. It's a fascinating dynamic playing out between long-term value concerns and that powerful short-term momentum. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of De-Risk.